Blue Chip Bulletin. Financial market updates and insights.
Today, we're grabbing our tool belts and digging into the latest earnings report from the home improvement giant Home Depot. We're going to break down the numbers, look at the big challenges they're up against, and figure out what it all means for you. All right, let's get right to it. We're going to start with the big headline numbers, the ones that really got Wall Street talking the moment they came out. First up, the one everyone watches, the bottom line. Home Depot posted adjusted earnings per share of $2.72. That's a really key metric for a company's health. And how did they get there? Well, on the back of some absolutely massive sales numbers. For the quarter, revenue clocked in at a huge $38.2 billion. So here's the deal. Both of those numbers, the earnings and the revenue, came in higher than what all the financial analysts were predicting. That's what we call an earnings beat, and it's exactly what investors love to see. But beating expectations, that's really only one part of the story. To get what's really going on with the business, we've got to zoom out a bit and add some context. And this is where it gets a little tricky, because even though they beat the estimates for this quarter, their total sales were actually down almost 4% when you compare them to the same time last year. So that's kind of weird, right? How can you beat what Wall Street thinks you're going to do, but still sell less than you did a year ago? Is something wrong with demand? Well, it all comes down to a little quirk in the calendar. Turns out, last year's fourth quarter had an entire extra week in it. That 53rd week tacked on about $2.5 billion in sales, so comparing the two quarters directly isn't really a fair apples-to-apples fight. Okay, now let's talk about the challenges. Because even for a powerhouse like Home Depot, they are operating in a pretty tough environment right now. And a lot of that comes down to the housing market. I mean, think about it. The biggest headwind they have is the housing market itself. Mortgage rates are high, which makes it really expensive to buy a new home. So what happens? People just stay put. And that creates this general feeling of uncertainty, which makes homeowners slam the brakes on those big, expensive projects like a full kitchen remodel. And look, you don't have to take my word for it. Listen to the CEO, Ted Decker. He said it flat out. The number one reason customers are holding back on those big projects is just that uncertainty. People are focusing on the need to do repairs, not the dream to do renovations. So if the average do-it-yourselfer is putting their wallet away, how is Home Depot still managing to grow and take business from competitors? Well, the answer is all about focusing on the professional. This is where Home Depot is getting really smart. They're making a huge strategic shift. They are doubling down on serving their pro customers. We're talking contractors, builders, remodelers. These pros are a much more consistent source of business, especially when the DIY crowd gets a little nervous. And this isn't just about giving them a better discount. Oh no, they're getting serious with technology. The CEO mentioned that they're using AI-powered tools to help pros manage their big, complex projects. Stuff that can build a parts list automatically and get materials delivered to a job site exactly when they're needed. It's a game changer for them. Okay, so we've got the tricky housing market on one side and this really smart pro strategy on the other. But before we get to Home Depot's official forecast, there's a huge elephant in the room we have to talk about: tariffs. This is a massive what-if for investors. There's been talk about a potential 15% tariff on all sorts of imported goods. For a company like Home Depot, which brings in everything from power tools to faucets from overseas, that would be a really big deal. It would mean higher costs, which they'd either have to absorb, squeezing their profits, or pass on to you, the customer, which could slow down sales. It's this big cloud of uncertainty that hangs over their whole outlook. So with that tariff question mark hanging in the air, here's what the company is officially guiding for the next fiscal year. They're playing it pretty conservative, projecting modest, low single-digit growth. They see sales growing somewhere between 2.5% and 4.5%, and earnings per share growth basically flat to up 4%. Plus, they're planning to open about 15 new stores. It's a forecast that says, yeah, we know it's a challenging environment. And that brings us to the final and maybe the most important piece of this whole puzzle, especially if you're thinking about investing. The big question: what is the stock actually worth? Now, before I show you the numbers, let's quickly get on the same page about a term you'll hear a lot: fair value. This is not the stock price you see on the screen. It's what an analyst calculates the company is truly worth, based on all its future potential. And this is where things get really interesting for any potential investor. A major analyst firm puts Home Depot's fair value at around $325 a share. But when this report came out, the stock was trading way higher, up around $385. So the takeaway here is that by this one measure, the stock looks, well, a little pricey, or rich, as they say on Wall Street. It's trading at what's called a premium. Its price-to-earnings ratio is 26.5, which just means investors are willing to pay over $26 for every $1 of Home Depot's profit. And that's more than people have historically been willing to pay. So, if you're a new investor, what does this all mean for you? It really boils down to a few key risks. You've got valuation risk, the chance that all the good news is already baked into that high stock price. There's market risk from that housing slump we talked about. There's always competition. And of course, that big tariff uncertainty is still out there, which could really mess with costs and profits down the road. Which leaves us with this final thought. Home Depot is without a doubt a really well-run company. They've got a smart plan to deal with a tough market. But with its stock trading at such a high price, the billion-dollar question for any investor is, has the price gotten ahead of the story? Is all that future success already priced in?